Hello and welcome to Share Talk. I'm joined today by the CEO and President, Arthur Milholland of Canadian Overseas Petroleum Limited. Well, thank you very much for coming on to the show today. For investors and new viewers, can you just explain what you do at Canadian Overseas Petroleum Limited and where the company operates?
Yes, we're listed here in the London Stock Exchange, as you well know, on the standard list as well in Canada on the Toronto market. The company is formally domiciled in Canada, but that said, all of our activities are in West Africa. We have a license offshore with ExxonMobil, Liberia, which we unfortunately drilled a dry hole on last December, which we have to make a decision on the end of the month about what we're going to proceed into the next phase or not. And as well, we have a very exciting, which the market paid a lot of attention to Liberia, but is somewhat maybe forgotten about, our Nigerian opportunity, which is it's got all three things on it. Near-term production opportunities, which is development, appraisal, as well as exploration. And we hold that. We have a Nigerian company as a partner. We're 50-50 in what we do. Which makes our life an awful lot easier for working in Nigeria, but it's also to conform with the law. But it's very attractive. They're on our block. It's called OPL 226, which sits 30 miles offshore in the sort of the central delta area of Nigeria, 150 feet of water, versus 8,000 feet of water we were in Liberia. And there are 5 wells have historically been drilled on the block. 3 intersected oil and gas, and 2 intersected gas. Now we're after oil, and our intention is either near the end of this year or early next year, is to drill a well right offsetting one of the oil discovery wells that was made in 2001, and actually put that well on production through an early production scheme. Now, what we have, in difference to, say, to Liberia, which was purely exploration, where the nearest well was 30 miles away, this particular block surrounds primarily a gas field that was discovered in 1972 by Texaco, and it has some oil on it, and it's on a very large structure where the gas is right at the top, at the crest. And what we have is all the acreage around it. And there were 2 wells drilled on the flank of the structure in 1972 on the we'll call the north side of it, that intersected oil, and as well as some gas, and in the shallow sands. And on the east side, of the southeast side of the structure, in 2001, a well was drilled and actually found the oil-water contact, which is very important. So what we have is essentially the meat in the sandwich, the gas being the top slice of bread, the water being the slice of bread at the base, and the oil in the middle. And it's large, so we're quite excited about it. Fiscally, the terms are attractive. It's a sole risk contract, so the Nigerian National Oil Company doesn't have a right of back-end into it, which has been a source of aggravation for those companies that bought into old Nigerian fields that, say, Shell sold, because the National Oil Company doesn't have the money to pay the bills. So it's got all the right things going for it, and in that water depth, use a jackup rig rather than a semi-submersible or.
Have you acquired a rig to do this yet?
We've identified 2 to 3 rigs that are available, and right now the market globally for jackup rigs is extremely soft, and it's kind of like going to Newbury, and if you're in the owners and trainers club, and sort of whisper to someone that you may be interested in buying a horse, and all of a sudden a number of horse trainers are your best friends. So drilling contractors are somewhat the same here. And we're after a somewhat specific type of rig, a rig that was designed primarily originally to work here in the North Sea, in the either the UK or Norway. And the reason for that, they're big. They're much more robust than a conventional sort of a size jackup. But the reason for that is that what we can do is we can use it as a production facility in the short term. It's got a big deck. And so our plan would be to offset this well that was drilled in 2001, drill the well to total depth, and we're actually going to we can complete 2 zones at a time. We can't mix them up or commingle them, but we can produce 2 zones, and then produce the well through a separator package if necessary on the deck of the jackup, which essentially separates the gas from the oil and any water, if any, which we don't believe that we'll find, but there's always some entrained in the oil a little bit, and then just flow it into a storage tanker nearby.
And what sort of timescales are you putting on this to get this online?
Our objective is we're working on the financing package here right now, and we've in our disclosure have said we've hired 2 investment banks, one here in London called Zeus Capital, another co-joined with a French investment bank called COPL. And COPL's is business is project financing, energy and mining ventures in Africa primarily. So rather than going, say, to the equity markets to do it all with equity, what we're pursuing are oil traders because they would like the access to the crude oil, and as well as merchant banks that fund this type of venture. So we're well along in the process. We started this in the spring, and by nature, it's a much slower process than, say, raising equity. But that said is that we do have the interest of one of the world's globally the larger group of one of the larger group of oil traders, which is a very good thing. And so we've had many meetings with discussions with them. We have a very detailed data room, virtual, so people can look at the technical work as well as the legal things around our contract and so on and so forth. And with the merchant banking group as well. So we're in advanced discussions with them, and hopefully we should have things at a point where by the end of the month that we could announce, or early to mid-October. And it's not our schedule is somewhat reflected on them, but things are extremely positive. Now that said, at the same time, we're not waiting to start the work that we're doing for the operational part of the venture. Is that the group is working along essentially a critical path at each step in the well design. We've finalized the exact drilling location where it is in time within like a meter type of thing. Where the well design process is well along. We're in discussions with contractors. And again, as that process goes, the risk analysis of the operation is also going at the same time. So with the service providers, so we take it, essentially the costs are coming down. So for example, our initial estimate of cost for this well over a year ago was $28 million US. Then it went down to 25. Now we're down to 19, and it's going to continue to head down. And a lot of that is that globally costs are coming down, and that's just to do in the reality of the world that we live in today, which is a $50 a barrel time versus 100, and they will come down even further. And what it does is it just enhances the economics. So, there is a view of people saying, well, some would say, well, oil's at $50, you can't make any money. Well, 2005 wasn't such a long time ago, and in my previous company at Oil Exco, we were right in the middle of doing a development at a field called Brenda, which offshore the central North Sea, and we had planned the economics of development at $20 a barrel, and oil hit 50 in 2005, and we thought we were geniuses. But everything else, the service industry then started taking their cut, out of that barrel, to the ultimate time when it was $100 plus, and effectively the explorer or producer, percentage of that barrel really never changed. All right, so it's somewhat retribution, but from our standpoint, but service providers aren't fools either. They've got equipment, they've got to run it,
Yes.
and especially in the case of a drilling rig, if you don't use it, you've got to shut it all down, and it starts to corrode. And after not a very long time, because it's in a marine environment, you might as well just scrap it. So their objective is to keep their equipment working, and at the same time, it benefits us in as much as that we could get things done at a lower cost.
Fantastic. And a few investors will be asking about Liberia, and
Yeah,
you
no,
already
that's fine. Yeah.
touched on that, and
Yeah.
obviously the partnership with ExxonMobil.
Yeah.
So just briefly, if you can update us and viewers on,
Sure.
on where you are
Yeah.
with the Liberia projects.
Well, we drilled a very large seismic anomaly, and it just wasn't us. It was Exxon looked at it the same way that we did, thought well enough of it, to invest, well over $250 million in the project. We were carried, but what we found by drilling the well was that the character or the expression on seismic that we and they and others along the whole trend, have believed that we could not only map the reservoir, but we could map the presence of reservoir, but we could map the fluid
Yes.
in it, whether it was gas, oil, or water. And given what I said before, the nearest well to us was 30 miles away. Just finding the reservoir, is historically, would have been a big step. Now we found the reservoir. We drilled. We thought we were going to intersect 400 feet, and we drilled 387. But unfortunately, we found water. And what we found through a post-analysis of the data, and it has taken an awful long time, is that we can't tell or differentiate between a water-wet reservoir and even a gas reservoir, and let alone oil. And for those who have some technical background, a gas reservoir, because it's methane gas, it's extremely low velocity, you should get what we call a bright spot. You should be able to differentiate that, and we can't. We've sat and talked through industry, with others that have had, let's say, similar results and things that have scratched their heads about a lot. And when I mean along the trend, I just don't mean in Liberia. I'm talking what we would call the West African transformed margin, and have found similar results. Now, scratching their heads similar as we are. There are other operators that have made oil discoveries, which we've seen seismic with that in Côte d'Ivoire, for example. And again, they look identical. And we're in a business of it's a look-alike. The geophysicist does his work and says, well, given what I know, it should look like this. And then you say, aha, there's one that looks like that. And then, of course, everybody gets excited. Now, so because of that, that's a variable that on your risk analysis makes it a little bit more risky to go on.
Yeah, understood.
The second thing is that the contract that we have with the government was negotiated in a time when oil prices were north of $100 a barrel. And so fiscally, it doesn't necessarily work in a low oil price environment, and it's somewhat prejudicial to it. So what our view is that we have a time for an election to make here, on September the 25th. And, we've suggested to the government that, maybe some changes have to be made to the contract. If they're, if we choose to not to make the election, because the election means it's electing and committing to drill another well, and is that our view is that there is still reason to continue on. I can't speak for ExxonMobil in that, but if we choose to, it's likely to carry on under a different fiscal regime, because that's the reason being. So we're still, it's just the 12th or the 11th of September today, and so there's some time yet, and where our position will be forthcoming here, towards the end of the month.
Understood. So, but it feels in the meantime, the focus really is on Nigeria.
Investors
should be looking at that.
Yeah, and the reason being is because the asset is quite large. If the investors were to go to our website, and I encourage them to look at our website, is that they'll find the resource estimates that are there, and if you look at the net interest, and they keep on going up as more work has been done on the drilling of a well, they'll increase even more. We believe is that our net interest of it, because we, with Shoreline, our Nigerian partner, own 80% of it, 50-50, so we would have a net 40. And the net share of it is actually would be worth as much or more than the well in Nigeria would have been. But in differences, Nigeria is one of the world's premier petroleum provinces, whose people sometimes like to send you letters in the mail. But at the same time, the issues in Nigeria have really never been around the finding oil. They've generally been around all of the issues pertaining to producing it, which have all been in the delta, like onshore places, if you want to call it land. We're 30 miles offshore, and where there are no troubles, and so there's, as I say, in some respects, Nigeria, the surface has been scratched, and there's bountiful opportunities there. It just is, you've got to pick and choose where the right spot is, and that's why we went after this with some vigor. It took us a long time to secure it, but it's secured, and I say we'll have the news will be flowing from it. The plan is as well, after we drill the first well, is not to stop there, is actually to drill up to 2 to 3 more additional wells through this early production scheme before we take it to a full-scale development. And one thing that the shareholders should understand is that if we were just a foreign entity, whether a Canadian company or a British company, and working there, we wouldn't be allowed to do this. Because we have a Nigerian partner, in the government's regulations or regulatory regime, is that they allow entities with Nigerian participation, indigenous participation, to do these early production schemes. And what that allows them to do is create cash flow to finance a larger development. And so we get the benefits of that. And we're not talking things that are insignificant. We're looking, our target is a well that would produce between 6,000 to 10,000 barrels a day. And, that's a lot of oil. And if you do, 3 of those, that's 18 to 30,000 barrels a day. And that's an awful lot of cash flow stream, which would lead into further development, which would be somewhere between 60 to 80,000 barrels a day or more, depending on the results of what we find here. The other side of it is the block is extremely large, and it's a little larger than what we had in Liberia. And we're just looking at right now just one part of it. And so we've also identified additional, I'm on the southeast flank of the structure here. If we take the northwest flank of the structure, is that we know there's 2 wells there that have oil in them, so there's additional development opportunities there. And as well, we've already, on the 3D seismic survey that was shot in 2012, have identified some extremely significant, sizable exploration opportunities, so it should be well down the road. So it's just not a small area, it's an area that was almost a little larger than what we had in Liberia, but we already know there's hydrocarbon on it.
Fantastic. So we look forward to all the updates coming.
Yeah.
It feels like it'll be a busy end of September, maybe October. So
that's right. So it's my job here now is, as we get closer to get things, is to start to get the story out. When I was a little boy, I remember I was the story "Never Cry Wolf" was put into my head a lot. So we want to make sure that we get the story gets out at the appropriate time, and now it's starting to be the appropriate time.
Fantastic. Well, thank you very much for coming on to
thank you very
Share
much.
Talk today. It's been an
Thank you
absolute
very much
pleasure.
for having me.
You're welcome.
Yeah.